Hello everyone, welcome to another series of Factor Investing. Today we are going to discuss about momentum factor, which is a more demanding factor and over a period of time, and last couple of even months we have seen that momentum as a factor has performed pretty well. So today we have Mr. Pratik Oswal, Chief Passive Business at Motilal Oswal Asset Management Company, and Pratik, momentum actually has seen a good momentum in last 1 year. So, what do you think? How you will explain momentum to a newbies who has just came into the world of investing?
Thank you, Ritu, for having me. So factor investing, there are different strategies, and as you said, momentum is something which is quite popular. It's getting more and more popular every day. It's something that has worked really well in India and has worked well in other countries, but specifically good in India in the last 10-15 years time. And the idea behind momentum is basically it's a passive strategy, but essentially and by passive I mean it's not. So I think one big misconception that people have is momentum is actively managed. It's very important to say that this is an index fund ETF. So there is no active involvement about which stock to buy, which stock to sell. As asset managers, our job is just to replicate the index. So when you look at the momentum index fund, what the methodology is essentially buying stocks that have the highest price momentum. So we have a universe of say Nifty 200 or Nifty 500. Within that, you choose 30 stocks or 50 stocks depending on the fund, which have the highest price momentum. So essentially, you are buying stocks that are trending. It's basically buying a fund which is on it all the time, buying the most trending stocks in the last 6 to 12 months time. And what we've seen is that if you have a strategy where you are continuously buying the most trending stocks in the last 6 to 12 months time, if you hold it for 10-15 years time, you're seeing that strategy is actually outperform the broad-based index like Nifty 50 or 500 by a considerable margin, almost 6 to 7%. So I think as a strategy, it has worked wonders, and that's why people are looking at momentum as a factor today for their investments.
So globally, we have seen the factor premium actually reduces once the lot much money chase that particular factor. So do you see the same trend in India as well?
Yeah, I do see the same trend. I keep telling investors is that the best time to buy momentum would be in the next 10 years. Next from today onwards to 10 years. And the reason why I say is because today the momentum is about a 10,000 crore category.
Yes.
And we see this category becoming 1 lakh crore, 2 lakh crores over the next say decade or so. And what happens is once it becomes a very big category, there are people who are also there's a lot of efficiency that comes into the play. So if you look at the US, momentum used to be a 4-5% outperformance product in the 80s and 90s. That's come down to say maybe 1%, less than 1% also. In fact, it's turned to close to zero if you account for costs. So we believe that the right now investors can really the premium of momentum has been about say 7-8% over the last 15 years time. It'll probably come down to say 3 to 4% over the next 4-5 years, and maybe even under that. So investors who are looking at factor investing, I think it's good to get in early. Right now, still, even though people are talking about factors, if you look at it as a segmental level, it's still very small. And there'll be more and more people who are coming in who will incorporate factor investing into their strategies. A lot of active funds will start using factors for their stock selection needs, quant funds like what we do. So I believe that yes, factor premium will go down, and which is why investors should take advantage of it over the next say 5 to 10 years.
So momentum performs in different cycles. So do you have, or can you just share some kind of data like which period or specific periods the momentum actually performed?
So momentum does extremely well in upward trending markets. Basically when markets are essentially upward sloping, markets are rising every month. And that happens so we believe that the market has 3 different cycles. You have a bull market, bear market, and you have a recovery market, which is in between a bull and a bear and a bull market. So momentum does very well in a recovery market as well as in a bull market. So currently we're in a bull market, as you know, the last 4 years. But what people don't understand is the scale of outperformance in a bull market is extremely high. So if you look at the last 20 years, and if you look at momentum strategy, every time the market is up 20-25% in a year, momentum has done double of that.
Right.
So the markets are up 20%, which is Nifty Sensex. Momentum will be 40-50%. So the scale of outperformance in a bull market is extremely strong, which is why I think missing out on a good year can be very harmful for investors, which is why we keep telling investors don't time momentum, because if you miss out on a bull market, for example, people last year was a great year for momentum.
Yes.
And this year also is a great year for momentum. But a lot of people have foresee that this year will not be a good year for markets. So they've taken a cash call or they've got somewhere else. But actually momentum's done well because markets have been upward trending. So bull markets are great for momentum. And bull markets is when momentum doubles the performance of the Nifty. So I think that's when it shines.
Yeah, so last 1 year performance is actually extraordinarily good in terms of...
No, actually it's happened many times. So last year's performance is not extraordinary, by the way. It's happened 5-6 times in the past.
But if in Indian mutual fund industry, we'll talk about last 3-4 years,
absolutely.
Factor actually has picked up.
Yeah.
And investors basically has seen last 4 years,
Absolutely,
whatever performance has come up. So definitely yes. How does momentum interacts with the other factors like, value and growth? Do you see like if it combines?
So combination of factors is what we would recommend to a lot of investors. Momentum, as I said, does very well in the upward trending market whenever markets are trending upwards. But there are factors like quality, low volatility. They do well in bear markets. Value does very well in the recovery market. So I think a combination of something that goes well in a bull market as well as what goes well in a downward trending markets could be a good way of using factor investing. So maybe a combination of momentum and low vol, or momentum and quality, or even a combination of momentum, low vol and value is a great strategy for anyone looking at good performance across market cycles. So I think a lot of investors in the West tend to combine factors, and even now in India, a lot of investors are looking at doing investing across 2 factors or 3 factors.
So as you said, momentum is one of the factors which do mostly good in bull market. And momentum, the characteristics of momentum factor is something, to catch up the things which is going up, probably will go up and all. How the volatility actually plays a role in this particular factor? Do we see like a downside, higher than the broader indices?
Momentum, as you said, catches on towards winning trends. The premise about momentum is that stocks that are trending upwards tend to continue trending upwards.
Yes.
And I think all the stocks that are trending downwards, you would catch on to stocks that are trending lower, that have a lower sort of downside than other stocks. So the volatility, to be honest, of a momentum strategy is not something which is consistent. That is something that investors should know. If you look at the past track record, then volatility is slightly higher than the index, but it's not consistent. So in a bull market, for example, a momentum strategy will have high volatility, whereas in a bear market, momentum strategy might have low volatility because it might catch on towards very stable stocks in the bear run.
Right.
So I think volatility is something which keeps changing for momentum. The idea behind momentum is it keeps if momentum is towards the high vol stocks, momentum will become high vol. Momentum is towards low vol stocks, momentum will become low volatility. So I think that's why investors should keep in mind that it's not really consistent. So volatility may not be a very good indicator about what might happen if you're investing in a momentum fund. But that's what at least. But obviously, if you look at it over the last 15 years, then yes, it is on the higher side, slightly higher, 10% higher than the Nifty.
Okay, so as we discuss about the performance, so given the recent performance dip probably in the last 6 months comparative to the other factors, do you see like a momentum is the one of the factor which will do well in upcoming markets?
Very hard to say. It really depends on what happens to the markets. The markets. So we've had a topsy-turvy market, not a very upward like one-way market in the last 6 months. So momentum has been obviously not the best performing factor, but it really matters about what happens in the next 2 or 3 years. If markets continue their bull run, then obviously momentum will do very well. If markets flatten or have a bearish sort of cycle, then momentum may not do well. No one knows. So I think it really depends on where the markets are and where the markets will be. I would say that anyone looking at factor investing should look at it from a 5-year perspective, 5 to 7 year, because in 5 to 7 years, you're very positive that the market will inch up higher, and that gives enough time for the factor to sort of work its reward on you. So I think that's what I would say. Very hard to say what will happen next 6 months.
So any advice you would like to give the investors, or 2-3 things, one who is coming in this particular factor?
Yeah, so if people are coming in momentum, I would say take a 5 to 7 year vision for this strategy. Don't look at 3 months, 4 months, 2 months performance. That's number one. Second is try to not time the factor. As I said, the bull markets are the best part about the strategy, and no one can really predict the bull market, to be honest. Even post-COVID, no one predicted the last 4 years. No one predicted. No one expected markets to be up 35-40%. So I think, and people have been very risk averse, I would say. So I would say don't try to time it. Don't take a long-term view on momentum. And I would say if you can combine it with another factor like low vol or quality. That will do very well in terms of across market cycles.
And the last one, probably not invest by seeing the past performance.
Yeah, I think look at more long-term past performance, say 10 years plus. Don't look at 1 or 2 years. I think the probability of replicating the last year's returns is close to zero. It's not zero, but close to very, very small. So I think you should not have expectations that if the fund has done 85% the last 1 year, it'll do the same next year. No, that's not how it works. Last year was a good year, and those sort of years comes maybe once every 5-6 years. So unfortunately, but the idea is that you give the fund or you give the strategy 5-6 years, so that you have one of those years in your portfolio.
So Pratik, let's go on a one-word answer kind of a question. So 1 key drivers behind momentum factor?
Price.
Suitable approach to invest in momentum factor solely or the multi-factor approach?
Multi-factor.
Okay. So 2 benefits associated with the momentum factor?
It's cheap and it's good.
Probably it's a sector agnostic and
yes.
So that
words,
way we can
It was
say.
hard to explain it. Now I was trying to do something simple.
It's like a broader kind of something.
So it's a style agnostic fund. It catches on to whatever works. So you can never say momentum is quality or momentum is value, momentum is growth. It will just take the shape of any strategy that is working.
Right. 2 key risks associated with the momentum factor?
I think high volatility and high churn.
Okay. And finally, how's the market conditions for momentum as of now?
If you take a 5-year bet, it's very, as I said, I think factor premium is still around, and take advantage of it.
Okay. So thank you, Pratik. Thank you for giving us insights on momentum factor.
Thank you so much for having me. Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.